Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So it's been a few weeks since I've done a video for this channel. I haven't had too much to say. Just going to do a little check-in here, a little vibe check on BTC and ETH. Alt's doing particularly well, doing better than BTC here, which is usually the case if BTC goes sideways, which it arguably has been since mid-October. That's when alts do best. Alts do worst when BTC is active and rising. So where do we stand here on trend? How do things look? Are we still on track for 100K by the end of the year? That sort of stuff I want to talk about today. So my barometer, my litmus test for are we doing okay? Are we bullish? Are we bearish? Are we above the cloud, which is this is what the cloud is here. And are we above the 200-day moving average? I don't have it on the chart, but we're above that. The 200-day moving average is somewhere around 50, 49, 47, somewhere down there. And we're still above all of those things. More importantly, we are at the key June, which is this red line here. This is the mean reversion target. So how this works is you have a trend, whether it's bearish or bullish. Throughout that trend, you typically get many mean reversions and potential bounce opportunities. So we are currently at the potential bounce opportunity. If you are turbo bullish here, the thing you don't want to see is this TK crisscross. You also don't want to see price drift into the cloud. If it drifts into the cloud, much like it did in May this year, it risks what's called an edge-to-edge move or further downside. Basically, it goes from the bullish side of neutral to the bearish side of neutral, and then it risks further bearish trend. So again, we're above, we're bullish, we're below, we're bearish. And when you're in the cloud, it's typically a no trade zone. But if you breach the cloud, like we did here with a bearish TK cross from the top side, the expectation is we reach the bottom side. In May, there was a much bigger trade there than there is now. There's still a trade to be had if that does happen, and it's something to watch for, but it's not anything that's triggered just yet. And even in April, this is a great example of why you need to wait for the bearish TK cross. You don't always see this where you get this move into the cloud here without the TK cross. And I'm only bringing this up because that's what we might see again here is sort of this fake out downside move before the eventual downside move, or just a fake out downside altogether. This is just part of the decision tree. This isn't up or down. It's you need these specific things to happen. In order to be bearish, I need to see a bearish TK cross. Until then, I'm not bearish. I'm bullish to neutral. We're above the cloud. Everything's fine. We're above the key June. And if you're bullish, you want to see us just bounce from here. Something else to watch for would be a TK crisscross, kind of like how we did here. This is not a great example of it, but you can see here's a bearish TK cross followed by a bullish TK cross later on. Bullish TK cross with price above cloud is the highest hit rate for bullish continuation. So that's if we see anything going forward bullish, that's likely what we see is a bullish TK recross with price above cloud, because I don't think this TK setup is salvageable to stay bullish. I think this will probably crisscross here over the next week if it's going to do so. So it's got some time, and because it's got some time, alts are probably going to do rather well. And if you would rather look at this on low time frames, you definitely can. Here's the 4-hour. This is obviously what you want to see for anything cloud related. Just smooth sailing, autopilot, cruise control. You get your Kumo breakout, and that was it, right? It was just up only ever since then until it got back into the cloud. Here's your bearish TK cross. I think the cloud is actually great for crypto low time frame, like 4-hour trending stuff. I wouldn't go any lower than 4-hour. I always get people asking me, does this work on the 15? Does this work on the 30-second? It'll work, but it's going to be super noisy. So for me, if I'm using a position with size, with leverage, I'm not going to trust anything lower than the 4-hour typically, for reasons exactly like this. Look how clean this setup is, and you can backtest this and you can say, it's junk. It doesn't always work out like that, okay? Like look at this right here. But when it does work out, it pays for the ones that don't. You can also see other TA here. This is just an inversion in shoulders that ended up playing out, but just to highlight that, yeah, an ETA works on any time frame. The higher the time frame, the more signal to noise you will get. So ETH has a better example of a double bottom forming, but this could be inverted head and shoulders, right? This could be a triple bottom type of thing. You already have that descending volume profile. This may not move until next week at this rate, but you need volume. You need us to break 60K-ish again. Ultimately, in order to get a similar setup to the 27th of September into October, you need us back above 62. So we could very easily repeat some sort of 4-hour trend once we're back above 62, but that's a country mile away from where we are now at 57. So we got a lot of recovery to do until then. Let's say you don't like the cloud. Let's say you want something super, super simple to watch. Here's the 1050 EMA cross on backtesting. This has an insane hit rate for trades. Yes, it can get noisy. Okay, nothing is completely perfect. There is no single holy grail. But again, the ones that pay out, or the ones that work out, pay for the ones that don't. So currently we're getting a bearish 1050 cross. If you want to be bullish again, I would look to this. If you want something super simple, look to this and wait for a bullish 1050 cross on the daily chart. Daily chart. I just emphasizing this because I get so many questions from people. I was the same when I first started trading. Kind of use this on the 10-minute time frame, right, or whatever. Of course you can, okay, but backtest it. I'm telling you, it's just not worth it. Okay, just give this a week and you'll know. In a week, we will know if this is bullish or bearish because you'll get a crisscross on these MAs, and it's that simple. Let's say you want something a little bit more specific with setups, but you still don't like the cloud. You can use the Fractal Alligator, which is the 5813 MA with these fractals, which print on high, low, high, or low, high, low. And how this works is, again, if we're above, we're bullish. If we're below, we are bearish. If these are crossed green, red, blue, we are bullish. Blue, red, green, bearish. So currently we are bearish, similar to the 1050 cross, similar to the TK crisscross situation. You don't want to be long until we're back above these MAs, much like October, okay? So currently the alligator is telling you, don't look for longs yet. Don't even look for shorts yet. It wants you to look for shorts once we start breaking lower lows. That's how this system works. So if we break lower lows, if we break current low, probably like 55 or something like that, 54.5, whatever this is. Once we break that low on the daily close, the candle has to be below that wick on the daily close. Again, I'm emphasizing that because people always ask, but it has to be a daily close, which means patience, people. So daily close below 54.5 would be a short entry based on this technical indicator. That's what the setup is telling you. It's telling you not to get long until this crisscrosses. So you've got some time here for sure until this crisscrosses. And if you do get short, your stop loss currently would be at 66, which is quite far from here, obviously, but it's a trailing stop loss system. So eventually you'll probably get a fractal print at 59 or something like that. But even this isn't telling you to long just yet. The good news about all this is that when it tells you long, it's going to be obvious on both of these, right? Even the cloud, it's going to be obvious on the 4-hour. It's going to be above 62, whatever. That's probably the most conservative. Now, if you want to be aggressive, probably watching the 1050 or the fractal stuff. But ultimately, the projection for the 6-figure potential hasn't changed because we still remain bullish. We're above the cloud, we're above the 200, great. We're also above this midline pitchfork, which I believe more and more pick 3 points to get a rate of change. And if you're above the midline, you're definitely more bullish. We're still bullish below, obviously, but we're on the bearish side of bullishness, if that makes sense, because you're below the midline at that point. But as long as we hold above this blue zone, I'm not worried at all. Even if we dip into the cloud, we can still recover potentially. You know, it gets less and less probable the more neutral bearish we get, because we don't have a lot of time to the end of the year. And I think I keep saying that because Q1 historically has not been kind to crypto, specifically BTC. Aside from 2021 was definitely an exception in the Q1 realm, not the rule. So this is still above the midline until we break below like 50. I don't think there's anything to be worried about. And January 1st target is basically 94K, which isn't even a stretch based on where we were in January, May. So this isn't hopium copium. This is the rate of change. Okay. Like it's just a chart, you know, that's all I'm looking at. Just checking in on a few other things. 2-year MA multiplier, still well within the band of that. Top side for this would be 135. So this is an oscillator. You want to buy in the green, sell in the red. This can exceed the multiplier, the 2-year MA multiplier. So it's the 5x of the 2-year MA. This can exceed that for weeks, but it's telling you it's a good time to be selling rather than buying when we're above that level. And the catastrophic failed experiment level is 27K. Anything below that is a buy. Pi cycle top has been correct every single time, even in even in April. It doesn't give you the exact day. It gives you like a 5-day window of, we're probably close to the top here. So we are definitely not crossed on that. We're good to go. It's pretty much binary. I don't really look at that thinking anything other than, is there a cross or isn't there a cross? 200-week moving average heat map also slowed down a little bit here. We're getting to the cooler blue colors kind of wavering between darker and cooler blue back and forth here. And this is just looking at the speed at which the 200 week is moving up or down. So if the 200 week is moving up very quickly, then that tells you we're probably closer to a top than a bottom. And it also acts as a downside support. So currently the downside catastrophic failed experiment level is 17.5. So between 26, 27 and 17.5, there's your bear market target for reselling your organs, retinas, liver, whatever that you bought at the top, right? As far as rebuying, that's the zone currently. That's going to change over time, but between 17.5 and 27 is the mega buy zone. This looks totally fine to me. Mvrv, another one I like to watch. Market cap versus on-chain activity. During every all-time high, including February, May, this thing has spiked rather quickly. And we are pretty far down. We're at 2.5 on this scale. The top previously was 7+. So anything 7+, then we're in trouble. Nowhere close to that. Hodl waves, something else, just to watch. Just flip through these once a week. That's what I do, just to get a sense of how we're doing. This looks at the age of coins moved over the past 6 months. And for each all-time high, this has corresponded with a 50% or greater move in total coins on chain. We're currently somewhere around 30% coins have moved in the past 6 months. So we're nowhere near this threshold. And this could be declining over time as far as relative to price, right? You can clearly see that here. We're getting fewer and fewer coins moving in the past 6 months relative to all-time highs since 2011. So that's also something to watch for in this next potential move up. Bitcoin exchange reserves, pretty quiet, nothing going on there. This dates back since 2018. This is at a multi-month low currently. This purple line is the exchange reserves, white line is price. This is just simple supply demand. If exchange reserves are increasing, we're probably more bearish than bullish. If they're declining, we're probably more bullish than bearish. Currently, we're still declining. So all I'm really looking for in all this stuff, I'm not looking for any specific signal. I'm just making sure we're on track. Miner outflow, again, supply demand. If miners are selling, we're probably more bearish than bullish. If they're selling during sideways, or if someone's accumulating a short during a sideways period, that's usually a toppy type signal. Miners not selling any more than they have been, so I'm not really worried there. Bitcoin difficulty continues to increase and is basically back to pre-China breakdown levels. I don't really see many people talking about that, but the network has essentially recovered from that aspect almost completely. That seemed like, end of days type stuff in the press at the time. Most of us were like, yeah, whatever, it'll right the ship itself, it'll figure itself out. That's part of the network, and it looks like either new miners have shipped elsewhere or Chinese miners have shipped to other countries now, including the United States, and hash rate is completely back to where it was. So no big deal there. Probably the most concerning of the things I check is a slight downtick. This is BTC and ETH, BTC in the red, ETH in the green. Slight downtick in on-chain activity here. This is active addresses for both BTC and ETH, and both are slightly down over the past few weeks. Not bearish, but you don't want to see on-chain activity go against price. And I definitely don't want to see on-chain activity start to decline when price is increasing. And if we look at transaction counts for ETH especially, those have declined pretty significantly. Part of that is probably just ETH fees are still incredibly high. We take ETH off there. BTC's transaction counts have remained flat and up. And all this stuff is subject to whether or not these transactions go layer 2 or elsewhere, DEXs, DeFi, whatever, right? That's not included in here necessarily, but something to just do a vibe check on. How are we doing here? So flipping gears to ETH, ETH to me looks phenomenal, unfortunately, relative to BTC especially. This is a massive W double bottom. Anytime you see these like double engulfing candles like this on high time frames, it when zoomed in is going to show you a W double bottom, just like it did here on high time frames. So on low time frames, this is going to look great. It didn't even retrace to that key June level. That's how bullish this has been, which is kind of insane. Now that isn't saying this won't eventually get there, but it's looking less and less likely that it actually retraces to 38, which is where I wanted it to go to get comfortable about getting back in. But we've definitely likely satisfied the downside gods for now with that low time frame chart pattern. Here it is on the 4 hour. Again, this is the 4 hour cloud. Here's the hit rate since October. It's been pretty good. Look, again, backtest whatever you want. I don't care. The 4-hour looks great to me as a setup for another potential long entry. Now, does that mean it's going to go up 50% in a month? No. It just means it's a good time to be long if we're above the cloud here at 4,400 on ETH. And something else to note, we're still above the 200 on ETH. We're still above the cloud. Like, there's no reason to be bearish at all on ETH. There just isn't. You know, we can talk about fees till we're blue in the face. We can talk about fundamentals. Trust me, I think ETH is mega trash. I think most coins are mega trash. I get it, but the chart is the chart, and the chart is telling you 44 is the level to watch on a 4-hour. And similar to BTC, I would watch other stuff. You know, if you don't like the cloud or whatever, watch the Alligator Fractal. This is murky, neutral, bearish, but it's gonna flip bullish probably before BTC does. Again, look at this hit rate. Look at backtesting. I don't care. It looks good for a long if the MAs flip on the daily. So I'd watch for that. Here's the 1050 cross. This thing's going to crisscross most likely over the next few days, if it even flips bearish. If this thing gets close to flipping bearish and doesn't, that is actually incredibly strong bullish. This is a signal on MAs. You, again, backtest that. Find those. It's rare that that happens, but it does happen from time to time. So even this looks fine to me. And the target for ETH hasn't changed. It's still 6K to 7K. Take some fib levels. Take a wick or take a candle body. Do whatever you want. We did break below previous all-time high, but we were still held above the local high here. Maybe I'm just grasping at straws as far as this still looks okay, but I think the target doesn't change here. It didn't have this mega breakdown yet at all, and if we want to use a pitchfork, not since 2019, but since 2021 on ETH, this is either just a mega insane bottom on this pitchfork rate of change that it's ready to just full send to crazy levels like 8.5 or something, or this pitchfork's going to be wrong like tomorrow or the next day if this breaks down. I don't fully trust this thing, the pitchfork, just because there isn't a ton of data here. It hasn't hit the midline yet. You know, until this thing hits the midline and starts to look like BTC's pitchfork in a multi-year basis, it's hard to say like with convincing certainty that this thing's going to hit that midline. But if it does bounce here, I like that level. I put on the 1-year MA multiplier as well, and the midline on that is at 7.9-ish. So the targets for ETH are getting quite silly on higher time frames even. So this thing could just moonshot. The target I trust the most is the fib target first. Once we get there, we'll see how that looks if we get there, and if we consolidate. You know, what you don't want to see is us wick into something here like 6.5 and then just get smashed back down to 4.5 or something. But there's nothing to be bearish about ETH here at all on low time frames. On high time frames, and against BTC, this thing looks the best it's looked in a very, very long time, as it's coming out of, or trying to come out of, this multi-week consolidation that initially looked like an M double top, then it looked like an inverted Adam and Eve potentially, then it looked like some sort of flag pennant thing, but now it looks very much like an ascending triangle. And yeah, it can change week over week. It can morph. It can be putty to the market, right? That's just part of the decision tree. What does this look like when it's consolidating? You know, it's still consolidating, okay? So what does it look like when it's out of consolidation? Well, it's starting to look like it's getting out of consolidation, and it looks like an ascending triangle. And that has a bullish bias, and you can measure that out easily with fibs. I like 0.1. That's a nice psychological target, and that's just the first target. That wouldn't be where this like tops, but this pattern itself gives you a target of 0.1, regardless of how you feel about ETH or BTC or AVAX or Solana or proof of stake. Doesn't matter. I get all that. I hear you. I see you. I'm on board. I'm just talking about the chart here. The chart says 0.1 is the level to watch if this thing breaks up, which it looks like it's about to. And then lastly, real quick, the ETH exchange reserves also just continue to downtick. Slight uptick recently, but in general, they continue to downtick. This may have been ETH Foundation. I can't remember when exactly they sold, but this looks completely fine. Again, supply just dwindling, and here's total value staked on ETH 2.0, still upticking, and that's not even talking about EIP 1559, which is continuing to burn ETH and making ETH deflationary. It's all just pumpamental stuff. The network itself is miserable to use. The fees are too high. I get errors and failed transactions all the time, but the chart is a chart, and you can't ignore that. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.